Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Global equities rise after the US and China confirmed trade talks will take place this weekend. Beijing also ramps up economic stimulus. Investors watch for the Fed later today. Shares of Novo Nordisk could fall after the Danish drug maker trims its guidance for the year. Obesity and diabetes medicines struggle with US competition. Plus, India launches military strikes against Pakistan as tensions escalate following a deadly attack by militants last month in Kashmir.
In the meantime, a quick check on these markets here as we digest the geopolitics around the world. Futures for Eurostoxx 50 virtually unchanged. Some positivity on the other side of the Atlantic, though the margin of change seems to be larger in the U.S. than in Europe. Of course, it is Fed day as well, so the U.S. 10-year at 431, just shy of 432 ahead of that release and the following presser. One eye, as analysts mentioned, on geopolitics. I'm going to put a focus on the Middle East. Conversations around the Houthis perhaps influencing the oil prices. Brent at a 62 handle. The countdown to the opening trade starts right now.
Wednesday morning. Good morning. There's a lot going on. Trying to kind of determine exactly how this is going to be priced in, I think it's going to be quite a tricky process. It's Fed Day. That probably is one of the big events of the day. But you've got an awful lot of other things going on. Geopolitics, obviously, front and centre. There's an awful lot of earnings. Anna was just talking about what is happening with the Novo earnings. But there's a whole stream of them this morning. And we'll get into that a little bit later. But it does seem as if the market, the risk-on narrative this morning, Anna, is being generated by the possibility of progress being made between the United States and China.
Absolutely. The world's number one and number two global economies. Could they be coming together? Well, they are coming together in Switzerland over the weekend to talk about trade. Don't expect a big trade deal, though. We've heard from Scott Bessent that this is about de-escalating a trade deal, a trade situation that has become so difficult that he describes it as not sustainable and acting like an embargo. So we're not expecting a new trade deal. We are expecting some de-escalation, though, and that's what's got the markets expected. Futures have gone higher, up by 0.5% on E-minis. Gold has come down. The dollar has gone higher. Oil has gone higher. All of this in anticipation of what could happen. And then, of course, we've got China's stimulus at the same time. So the Chinese economy trying to protect itself with various cuts in interest rates in China and also, crucially, some other stimulus measures to try and get Chinese consumers out buying cars, buying electronics and spending.
And some of the kind of wonky tools, I'm using that as a technical term here, on things that tackle things like consumption or funding when it comes to tech as well. You mentioned the kind of de-escalatory tone from Scott Bessent as well. I think the markets are viewing this as a positive, not only because of the kind of technically high-level talks that there is, but for so long in the lead-up to this, there was no conversation at all. And we had so many reporters coming out of Asia talk to us and say these conversations start from the bottom up before they rise to the levels of Scott Bessent or President Trump. And there was no early signs of this. So to go from kind of 0 to maybe 90% very quickly is certainly perhaps some cause for hope.
I hear your story, but what I think is another side to this story is that this is going to take a long time.
Yep.
And that certainly, and I think you can read that into also the Chinese response this morning. They're not coming out all guns blazing. They are coming out again with an incremental move forward in terms of the stimulus that they're delivering. These talks are going to take a long time. Bessent talks about them being unsustainable, the current levels of tariffs. Yes, that is very true. But is 50% also unsustainable? I wonder how we can de-escalate, but do we de-escalate to the point at which actually positive things happen? Or is this just a kind of, we de-escalate down to the point at which actually you're kind of in the plus or minus whether or not you're going to have an effect? I don't know, but it does seem as if we are in a situation, and Paul Tudor-Jones was talking about this, you could slash tariffs by 50%, but you're still going to have a big effect on the economy and you're still going to see stocks going lower.
Yes, and I also refer us to the comments we got from President Trump yesterday when he was sitting next to the Canadian Prime Minister, Mark Carney, being asked about the wider trade conversations and saying, I'm going to dictate the terms. And that might work with some countries, but you wonder if that's really going to work with China. So we'll see what progress can be made, and to Guy's point, how quickly.
Between the two largest economies. And then there's everyone else kind of making trade deals on the side, bracing for their own negotiations with Washington as well. And I think this is where Europe comes front and center. In the last 24 hours, a flurry from the EU and from the UK. I'll start with the EU here, talking about 100 billion euros that they are basically prepared worth of U.S. goods that they are ready to hit with tariffs should it come. At the same time, potential trade deals that the UK has then made in negotiations with the United States, but also a record trade deal with India as well, really targeting, again, the good story. Services still very much off the table.
So I think you have to always look through British understatement. and I think this is a case where actually British understatement might actually be accurate. Limited is a word I'm hearing an awful lot when it comes to
for India.
For the UK-US deal.
Okay,
the Indian deal feels slightly more sort of positive, but this US deal feels very limited in nature, steel and cars, maybe a few other things. This is not a comprehensive trade deal.
Right, it's really interesting. Our colleagues writing their copy this morning, yes, using that slightly careful language and even calling it an economic deal, not calling it a trade deal. We'll try and get into the detail of why. But I'm really fascinated as to what it protects you from if you get any kind of trade deal, a limited economic deal even, with the Trump administration. Does it protect you from future pharma tariffs? Does it protect you from tariffs on the film industry? That has created such a lot of heat for the UK media sector over the last 48 hours or so. And if it doesn't protect you from any of that, then I mean, sure, it might serve a purpose for cars and steel, but it's just, it's not full and comprehensive.
Like, we make some cars and we make some steel, but that's not the bulk of the British economy. In any shape or form.
Yeah, well, I think the India side of this is really interesting because if you then take what the UK and the India have negotiated and make you use that as a litmus test for India and the United States, so the first and I think the fifth largest economy in the world, that's a pretty big test. And that some of the tariffs with a country, India, that has been historically very protectionist and very hard to do business with if you are an international customer, those numbers have come down on things like, well, initially goods, but also with the idea that in 10 years' time, those rates will come down even more. Does that show some sort of signal or some sort of willingness with India to offer that to the US
I saw
as well?
HSBC was out yesterday saying how good this was and how exciting this was and how this is so something for financial services perhaps in some form, in some way. I do wonder what role President Trump is playing in these other trade deals and trade conversations, even if he's not at the table, because this UK-India deal has been talked about by so many prime ministers for so long, whether having Trump in the White House was the final push that was needed to get these two to find some common ground.
It is already being politicised, though, in the UK. And the immigration story does seem to be at the heart of that criticism that is coming particularly from the right. So it'll be interesting to see kind of how the government pitches this one and what the ultimate effect is, because following the local elections, the immigration story is kind of politics number one at the moment here in the UK. Let's change direction a little bit and get away from the politics to the geopolitics and the trade into what has happened overnight in India and Pakistan. India has conducted targeted military strikes against Pakistan, which said it shot down 5 Indian jets in retaliation. The tit-for-tat blows come after a militant attack that killed 26 people in Kashmir last month. Pakistan's defence minister explained his country's actions.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
We will deal with it properly. We're not interested in any escalation or nuclear weapons, but we will deal with it. We already have dealt with it to the extent that we wanted. We've knocked out some of mostly the terrorist camps, and that's what it's all about.
Does this follow similar patterns that we've seen in the past between these two countries? Let's try and get some details as to what exactly we do know about what happened overnight. Our Delhi Bureau Chief, Debjit Chakraborty, joins us now. Can you give us an update? We've been getting a series of updates throughout the morning. What is the latest that we know about what has happened and where it takes us next?
Thank you, Guy. We just came out of the media briefing that the Indian military forces did in New Delhi. They described the entire operation, which started a little after midnight in the wee hours. There were 9 targets which the Indian armed defense carried out. Some of it deep inside Pakistan for the first time in 50 years. So they are saying that the main target was only the militants. And some of them which had kind of carried out or has links to the deadly attacks on tourists in Kashmir last month. So So they generally kind of briefed on what were the targets, and they said that Pakistani civilians were not targeted at all, and it was only targeting the militants, militant hideouts. From the Pakistan side, we had the Pakistan army spokesperson who briefed media in Rawalpindi a short while back, and they say that they have brought down 5 Indian jets in retaliation, and they claim that some of them are Rafales, while Indian side has not confirmed anything on the downing of the fighter jets. But yes, the Pakistan side is saying that almost 26 civilians have been killed. So there's no confirmation from the Indian side as well on that. So far it seems like there is kind of restraint in further escalation. India, we have not heard anything beyond those attacks from the Indian side. From the Pakistan side, you just heard the defense minister saying that it won't retaliate if India kind of wraps up its operations. But yeah, I mean, we are though expecting some kind of retaliation from the Pakistani side.
OK, and we'll watch that a little bit later. Debjit, thanks very much indeed for the update. Our New Delhi Bureau Chief, Debjit Chakraborty, joining us with an update. We'll go to Islamabad a little bit later on the programme and continue to get an update on what is happening with this situation. In terms of the show that we have in front of us, let's give you an update on who we are going to be speaking to. Jason Paltrowitz, OTC Markets Group Director, talking to us about the opportunities that investors have maybe to tap US funds to access European companies. Monica Defender, Mundi's Investment Institute head, is going to be joining us a little bit later on, as will Harry Broadman, former US Assistant Trade Representative. Looking forward to that conversation.
Lots to talk about when it comes to the trade agenda. And on corporate earnings, we'll talk to Alexander Lachik, Pandora's CEO, very much a company at the heart of these trade tensions. So we'll definitely dive into some of the detail there, how you manage the volatility in the trading environment. And Ida Lerner joins us, the CFO of DNB, Scandinavian Banking.
Plenty of other things to watch today as well. We all have one eye on Rome. The papal conclave does begin today to really see who can take over the leadership of the Vatican. So that's going to be something that we keep our eye on from around the world, truly. But then, of course, over in the States, a slew of both data and earnings. Disney and Uber are going to be crossing the wire after the market close in the U.S. as well. But I think the headline might just be at 3 p.m. where Scott Bessent will testify, even though we do have a Fed rate decision today as well. So that's going to be something to keep an eye on.
Yeah, did we mention the Fed rate decision? You did mention it.
I did mention it.
I think we had it in our headlines. There we are. Is there much to say?
I think there probably isn't much to say this time round. I think the Fed would dearly like to keep a low profile at this point. But it's going to be interesting to hear what the commentary is, what Powell says, what effect the tariffs are having, how he's watching the soft and the hard data, how he's thinking about the labour market. There's a lot going on. We haven't heard from Powell for a while. We haven't heard from the Fed for a while. Obviously, we've been in a quiet period. So I think the market will definitely pay attention to what is said here. And I'm getting a number of analyst notes at the moment that are suggesting that actually early Fed rate cuts cannot be excluded, despite the fact that the market's kind of backed away from that a little bit.
Well, likely pointing to, very quickly, the labour market and the fact that it's still strong, and therefore that's the indication of strength. So I imagine he'll lean on that one. OK, there's plenty of other things going on. As we said, it's a busy morning. Trying to thread it all together is quite a difficult prospect in terms of how we're going to open these European markets in 46 minutes. Let's talk about some of the other stories. President Donald Trump says the US will stop bombing Houthis in Yemen after a ceasefire was agreed. The precise terms of the agreement have not been released, and it's not clear if the move will lead to the resumption of commercial shipping through the Red Sea. Traffic has plummeted through the key waterway since 2023 as the Houthis targeted vessels in protest at Israel's military campaign in Gaza. It's also worth noting that President Trump will be travelling to the region later this month. Canada's new Prime Minister Mark Carney has met with US President Donald Trump. The two discussed trade pressures facing the relationship and agreed to discussions that will continue over the coming weeks. Carney has also rebuffed Trump's suggestion that Canada becomes part of the United States.
Having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale ever, but the opportunity is in the partnership and what we can build together.
Let's go to Germany. Friedrich Merz has won a parliamentary vote to become Germany's new Chancellor on his second try after a shock loss in the first round. He's the first incoming Chancellor since World War II who has failed to get enough votes first time round, leaving lawmakers stunned and his authority as a result diminished. As the voting was secret, it's not known who amongst his coalition decided not to back him initially.
I think even he said he may never know. So maybe that one goes down to history. Coming up on the programme, we'll be back with the earnings stories as well. Novo Nordisk cuts its guidance and its shares are called to open lower. We will check in on the drug-making giant at the open, of course. Plus, we'll keep you up to date with the latest developments out of Pakistan and out of India as tensions between the two nuclear powers mount. Up next, back to markets. Sentiment is boosted by upcoming US-China trade talks. They're set to take place over the weekend. While the Fed is in focus, it makes its latest rate decision, of course, later today. If you want to get involved in any of these conversations, IB plus BBTV Go is, as always, the function to use on the Bloomberg terminal to get in touch with us. This is Bloomberg.
So, at the moment, it feels like we're risk on this morning. How long that lasts, we'll wait and see. But markets certainly welcoming news that the US and China are at least going to start trade talks and at a relatively high level. So let's talk about the impact that this could have. Valerie's here with the details.
Hey, we got a key weekend risk now. Saturday, these discussions between the US and China set to take place in Geneva. The US equity market futures really did like these headlines. They jumped around over 1% on the news that these talks will continue. They have since paired that excitement, Guy. S&P futures are still up by 0.5%. The Bloomberg US dollar spot index is liking this as well. It's up around 0.25%. This is going to be a key risk event for markets. But before we get there, we have to deal with the Fed later tonight. The decision at 7 p.m., the press conference at 7:30. This one is really going to be about the nuance in the press conference, Guy. Does Powell want to keep the pricing for potential June rate cut open? Right now, we're pricing in 8 basis points of a Fed cut in June. A full cut not priced into July. Will he sound hawkish or dovish and lead the market to keep that door open there for the Fed cut in June? That's going to be the key assessment from this. The hawkish thing he could possibly harp on, Guy, is this rise in inflation expectation indicators. We've seen a sharp increase across regional Fed surveys when it comes to prices paid. If he wants to price out these Fed cuts in the market, he could harp on something like this, and that would lead the market to interpret his comments as hawkish.
We'll wait and we will watch. It's going to be a busy day. Valerie, thank you very much indeed for setting some of it up for us. And, of course, we do have special coverage of the Fed decision later today. That will start at 6:30 p.m. UK time. Let's look at this from a different angle and bring in Jason Paltrowitz, Director of OTC Markets Group. It's a US-based trading platform which enables companies to tap US capital pools and global investors to access unlisted early-stage equities. Good morning, Jason.
Morning.
The sense of late has been that money has been leaving the United States and going elsewhere. Can you give us a kind of sense of the scale of what you're seeing if that move is true?
Sure. You know, we're the largest stock market for non-U.S. equities in the U.S. So we have over 10,000 securities from around the world trading on our platform. And what we've seen kind of last year into this year and being accelerated through the Liberation Day, if you will, is huge amounts of money being put into primarily Asian and European equities. We've seen over 70% growth in terms of the trading volume, dollar volume, that's going into both European and Asian equities. From Liberation Day, that accelerated an additional 10%, if you will. 32,000 trades a day increase. So it's a tremendous amount of money, as I said, being pulled out of what we see as to U.S. equities and looking at European.
Is this U.S. money leaving America, or is this money that has been invested by the rest of the world in America coming home?
It's primarily U.S. money coming out of U.S. equities and going into European and Asian equities. However, we also have an overnight trading platform, which is connected into Asia. And so we're seeing a tremendous amount of money coming out of Asia into international equities, but using our platform as the mechanism. So if you can take ADRs from the UK, Switzerland, Germany, France, and you can buy them in US dollars during Asian trading hours, we're seeing money go into that as well. And I think if you look at you know, all the talk last year was around how UK, as an example, was trading at a 40% discount to the U.S. I think U.S. investors started to see that opportunity along with some of the headwinds that U.S. equities were facing. And I think that movement is what we're seeing.
So I was going to ask you, is this a sort of push or a pull here? Is this because U.S. investors think the trade conversation, the trade policies of the U.S. administration are going to damage U.S. business? Or is it because they just see positives in Europe, German investment in infrastructure, for example, and other drivers?
I think if we looked at it kind of pre-Liberation Day, pre-Trump, what you saw was U.S. investors looking at the U.S. market and thinking, all right, this is a little frothy now, and maybe we're overvalued, and let's look elsewhere. And I think we saw that trickle, and UK is a good indicator there, where we saw money moving into UK equities specifically, as well as pan-European. I think the Trump only exacerbated that.
Yeah.
And I think people are actually looking at the U.S. and saying, forget the overvaluation. Are there structural issues now in the country?
Yeah.
Where, you know, the U.S. used to trade at a premium because of things like rule of law, and people starting to question that stuff. And diversifying, not saying that there's any big shift in terms of perception of the U.S. market, but maybe covering themselves a little bit through those opportunities.
We've seen quite a lot of European businesses, well, UK-listed ones in particular, deciding to go list in the US. I suppose if lots of them do that, that undermines the demand for your products.
It does. We have a saying, list local, trade global. So we're very much about companies listing in their home market. We are purely a secondary market, so without those home market listings, we kind of don't have as much to play with. What we found, you know, the big names that everybody talks about that have moved over to the U.S., you know, that's the big unicorn stuff. If you look below that, though, in the SME space, there's still companies listing here. AIM still sees growth. We're seeing a number of those companies looking to access U.S. pools on our market. Even in the U.S., you know, there's talk of, is there a slowdown in the IPO market? Even in the U.S. this year versus last year, I think this year, right now, we're up to 114 IPOs this year versus 64 last year at the same time. A lot of that stuff, though, is in the small market cap space.
Jason, when you talk about the clients that you're attracting here for some of the products, are we talking about institutional investors? Are we talking about the retail landscape? Who is driving the volatility right now?
On our market, it tends to be a 70-30 retail to institutional. If you think about U.S. retail, and that's vast, right? U.S. retail used to be, they said, the blue-hair old ladies looking for dividend checks. That's changed a lot. It really is investors that don't have the breadth and depth and access to be able to trade multi-currency around the world. So a lot of that will be U.S. retail self-directed investors, but that'll also be third and fourth tier institutions that don't have the custody networks to buy in, you know, yen or pounds or Swiss francs. And so they come to our markets to be able to do that all in dollars.
And are you attracting a retail audience internationally? I mean, we talk so much about the U.S. retail traders, but let's not forget the 2015 kind of Chinese equity market fiasco based on Asian traders largely. Are you seeing any sort of interest from that side of it, from the retail landscape internationally?
Last year, we launched our overnight trading platform. So along with Blue Ocean, we were one of two now that are trading overnight, both NMS and OTC securities. And the primary interest in that has come from Asia. So if you're looking at retail brokerages like Futu and Mumu that are linking into our markets to try to, again, access those opportunities during U.S. trading hours, U.S. dollar.
Gotcha. Jason Pouchowitz joining us on his trip here to London. We thank you so much for joining us around the table. Director over at OTC Markets Group, walking us through some of the players behind the volatility that we're seeing. A volatility that is largely driven by the tariff story. Coming up, we're going to dive into a different angle on that through the view of the earnings sector. Pandora cutting its profitability guidance for this year and next as the Danish jeweler braces for U.S. tariffs. CEO Alexander Lachik joining the program next. This is Bloomberg. The 30 minutes from the start of the opening trade. When you look at the futures picture, a little bit muted relative to what we're seeing over in the United States. And I think that's crucial, that divergence between the European indices and the States. The States in positive territory. By comparison, you can see some pressure on Eurostoxx 50 futures down to the tune of 0.1%, but underperformance when it comes to the CAC.
If you look at the bond markets, it's Fed day. So we're going to have to wait and watch and see exactly what happens a little bit later on in the United States. So we'll keep an eye on what is happening there. At this point, it looks as if French yields are ticking a little higher than others. Elsewhere, actually, it's a fairly quiet session. Germany's not moving around very much. Maybe everybody's just kind of continuing to think about the Champions League last night. Inter, what a game. I didn't stay up late, but I know that my son was shouting at the television last night. Inter winning into the Champions League final.
30 minutes into the show.
Yes.
I was trying to think of an opportunity. I couldn't think of an obvious opportunity. The bond market presents me with an opportunity to talk about Champions League football.
That is a measure of how much news there has been this morning. That it took Guy 30 minutes to take us to football.
To get there. It was a great game, apparently.
Let us go to the global consumer and to tariffs, actually, because Pandora has cut its profitability guidance for this year and next, citing currency headwinds and silver prices. The Danish jeweller said it will consider further price increases in response to tariffs, with the extent and timing yet to be determined. Just overnight, in fact, we've heard from Pandora maintaining their full-year organic revenue forecast, but excluding any potential tariffs beyond the 90-day pause from their analysis. Let's talk to Pandora's CEO, Alexander Lejcik, who is with us now. Alexander, very nice to speak to you. So you're maintaining your full-year organic revenue forecast, but I imagine there's not a great deal of transparency beyond the April, May, June. So into the second half of the year, tell us what transparency you have and what ability you have to come up with guidance.
Well, I don't have a crystal ball, unfortunately. What I do have, though, is a business and a brand that is very strong, and it stood kind of the test of this turbulence through the pandemic, through the crisis we've had with Ukraine and interest rates, etc. So the value proposition of Pandora is very strong. And when people get a little bit less discretionary spend to go around, Pandora seems to kind of do quite well. So that's what I have going for me at the moment. Then, of course, all this noise around tariffs, that seems to be kind of the different things going on every day. So that's kind of why our guidance when it comes to organic growth remains as it was yesterday. Yes. We've done a slight adjustment, as you mentioned. That's purely due to FX. The dollar is getting weaker. We have a third of our business coming out of the US. So that's all there is to it, really.
OK, so a third of the business coming out of the US, and that means you're quite exposed to the tariffs for products going into the US, especially because you produce 95% of your jewellery in Thailand. You have a plan to open a site in Vietnam, but there's a 46% tariff on products from Vietnam into the United States. So, Alexander, does this leave you looking for other production locations, or is that just not a path forward for you right now?
Well, first of all, one has to remember that even if I said, let's build another plant somewhere, that takes roughly 3 years at least to get something up and running. The other thing is you need to go to places where there's actually a tradition of crafting. I have almost 15,000 craftspeople working for Pandora in Thailand at the moment, and they have 100 years of tradition of doing crafted jewelry. So it's not so easy. It's not like moving a machine from one place to the other. That would be a quite straightforward affair. So first of all, finding the skilled people that can do the jewelry for us is the first protocol. And then the other one is, of course, is the economics around it. So if you look at labor cost, if I would consider going, let's say, stateside, that equation simply wouldn't work for us. Because of us kind of being an affordable proposition. So in a way, this tariff is an unwelcome aspect, but we are not going to walk away from the positioning of Pandora offering affordable jewelry to the many people, not just in the US, but all around the world. So, yeah, so we will have to figure out how this new world is going to play out.
Well, Alexander, this is Kriti in London. As you figure out this new world and what this new kind of landscape actually looks like, what are you doing to mitigate your costs in the short term? Initially, as you say, that a lot of Americans are buying your products at the end of the day. How do you mitigate the short-term impact?
Well, so first of all, I mean, our U.S. business is in really, really good shape. This last quarter, we grew by 11%. So there's a very strong momentum in the U.S. business. Mitigation, I mean, I've been on Pandora for 6 years now. And when I started, we were buying silver at $16 per ounce. We're fundamentally a silver jeweler. Today, if you look at the spot, it's probably going to be twice that amount. During this period of time, we've actually maintained our profitability. We actually increased our gross margin through various, fundamentally through efficiencies, a little bit of pricing in that equation. So it's kind of in the toolbox. Those are the primary things you kind of go to. Because it's not much less to do, really. Now, pricing, we've always been very conservative on pricing, because if we start kind of pricing up too much, then all of a sudden you're not affordable, and then Pandora is not the Pandora that people like. So it comes down very much to kind of production efficiencies, other type of efficiencies that we can run in our value chain. And, yes, a little bit of pricing has been part of the equation. Now, if somebody imposes a 40% tariff on your products, yes, you have to rethink a little bit the formula around your proposition in terms of pricing to consumers. But let's not lose sight of the fact that we're not the only ones in the jewelry industry. So if this indeed is where the US lands, then the whole sea level is going to rise. So then you kind of need to be clever about how you position the brand in that context. But this is all speculation. This is all ahead of us. What we can do is we're very firm on our current strategy. We're very agile to kind of move with the changes, and then we do a lot of scenario planning, as you can imagine.
Alexander, good morning. It's Guy. Why are lab-grown diamonds not turning out to be as big a hit as maybe you originally anticipated?
So first of all, lab-grown diamonds is on a very strong growth path, generally speaking. In the US, I think it's now less than 2 years ago, there were more loose stones sold that were lab-grown than were mined. So the consumer is making the shift. There is no debate about this. A lot of that shift initially seems to be coming from the bridal and engagement sector, where we actually don't play. So we're kind of more in the self-purchase segment, if you may. The market is cut roughly half and half. So we have seen a much stronger surge in that sector. But it's coming over to the kind of playing field where we are. The other thing which we have learned over those last 3 years is that the cohort, the consumers that we're addressing, they are more into price points that are around the $300 to $500 mark, rather than the $1,000 to $2,000 or even beyond. And initially, kind of we spread ourselves across the whole spectrum. Now we're kind of seeing where the customer flows are. So we're kind of rejigging a little bit the assortment. In the last quarter, my unit growth was over 80% in the US. So I do think we have a pretty sensible momentum in this business.
Alexander, great to catch up. Always a pleasure. Alexander Lutchik, the Pandora CEO, after the company has published numbers this morning. Kriti.
Let's go from the jewelry business to the banking business. DNB Bank has reported better than estimated lending profit driven by volume growth. Norway's largest bank saying it's seeing more clients seek advice on how to deal with the turbulent markets. DNB CFO Ida Lerner joins us on the program this morning. Ida, pleasure to have you as always. Walk us through these numbers here. What is driving the beat?
Well, first of all, I think what's driving the beat is the underlying strong economy and also the activity level that we're seeing in the economy. We're seeing a strong momentum across the board in all business areas, as also in all product areas. We see a strong momentum in the personal customer segment, driven by an activity increase that we're also seeing in the housing market. Number of houses being sold has increased by approximately 20% year to date compared to the same period last year. So just the underlying growth momentum and activity level was high and continued to be high also in the first quarter. In addition to that, we see a strong growth in our capital light business. The commission and fees are up 29.5% compared to the same quarter last year. And of course, that is a strong testament both to the business model that we have and the growth that we've done organically in the commission and fee side, but also builds upon our belief that the acquisition of Carnegie will continue to show promising results, now with Carnegie being part of our numbers from March.
Good morning, it's Guy. Can I just talk a little bit about the broader picture? Obviously, what happens with rates is going to have a fairly meaningful impact on what the business looks like going forward from a net interest income margin story and how the economy performs. You say in your statement the Norwegian economy is sound and Norway has considerable muscles to stimulate the economy when necessary. When necessary, do you think the rates should come down now? Do you think the Norwegian economy needs rate cuts now? What would be your outlook?
I mean, if you look at the economy overall, GDP growth has been there. We're seeing a positive momentum in terms of activity level across the board. In the small and medium-sized enterprises, we're growing loan volumes by 0.5%. And that's in spite of the fact that the largest engine that is usually there for small and medium-sized enterprises being new builds of houses hasn't even started. Construction industry is definitely not up and running again to the same levels that we're used to historically. So it's the broader picture of the small and medium-sized enterprises that is growing, and also in terms of activity level. We saw that the Norwegian Central Bank decided not to decrease or cut the interest rate when they were expected to do so in March. And the main reason for that is because our customer seems to be able to manage the increased interest rate levels in a very good manner, both on the personal customer side, but also on the small and medium-sized enterprises side. And the good momentum in terms of real wages has increased, and we're also seeing that as a positive thing going forward. When we talk about the stabilizers in the Norwegian economy, the Norwegian economy is strong, and we're seeing that it hasn't been impacted to the same degree as other economies. Of course, that is also driven by a strong growth in the oil-related industries, but also across the board in terms of relative growth.
So your suggestion would be, and we're coming up on another decision, that your suggestion would be that the economy doesn't need rate cuts right now?
Where we stand today, it doesn't seem to show any signs that the economy needs rate cuts. On the other hand, uncertainty has increased over the past few weeks, and coming out of the first quarter, of course, the uncertainty level related to trade barriers and also uncertainty in terms of geopolitical development has increased. Some of our corporate customers are holding back on investment decisions, which is very natural. But overall, I think this strong momentum that we saw in the first quarter also gives a testament to that the economy is performing very well in Norway and is expected to continue to perform well. But we are a small economy, small open economy, which of course will be impacted also by what's happening around us.
Yes, and Ida, good morning. Small open economies can benefit from cross-border M&A. You seem to have managed to do some cross-border M&A. Other geographies seem to stumble either on domestic M&A or on the cross-border front. Just briefly, what can you tell us you've learned about how you go about doing those deals?
Well, I think, first of all, what we are doing is looking at the more pan-Nordic setup. I think the Nordics are becoming more and more of one economy in terms of if you look at the capital markets areas. Our corporate customers, even though they're small, medium-sized enterprises that are being started, look upon the Nordics as being one market already from the outset. So just looking at the capital light business area and the growth that we're seeing in the capital markets business, there the Nordics plays a very important role. Having placing power and have advisory capacity in all different industries that are growing in the Nordics, as well as in the geographies growing in the Nordics, becomes even more important. So I think from a cross-border perspective, looking at the Nordics as being one market in capital markets becomes even more important. The same goes for asset management, where we see a strong momentum, strong growth. There, Norway is lagging behind in terms of the other Nordic countries when it comes to retailers' long-term savings. But there we see a strong uptick also in terms of the retailers are increasing their savings and are also sticking to the savings agreement also in turbulent times.
Ida, you talk about the kind of the Nordic regional landscape as well. Let's broaden that to the rest of Europe. As Anna mentioned, DNB is often in the room when some of the politicians and policymakers in Brussels and in other parts of Europe are talking about how to simplify and deregulate some of the banking space. In your view, very quickly, what does Europe need to do to make banking easier from a management standpoint?
I think we need to simplify and standardize. I think that is going to be the most important thing. And I think all the initiatives coming from ECB is very important in terms of simplification and standardization. We don't think that there's going to come a massive deregulation stemming from the European perspective, But simplification and standardization will be extremely important, especially if we're going to see more cross-border M&A deals, but also if we're going to see investments that will bring Europe to a completely different competitive edge than what we've seen in the past few years. So I think standardization, simplification will be very important. And I think there are some very positive moves that we're seeing already now, but we need to act quickly because there are others that are moving even more quicker.
Ida Lerner, a pleasure to have you on the program, the CFO of DNB, walking us through the results of the bank, but also, of course, what we're seeing in the broader European landscape. We thank you so much. Coming up on the program, Novo Nordisk cutting its guidance and its shares called to open lower. We're going to dig into the drug-making giant's results as part of today's Stocks to Watch. Stick with us. This is Bloomberg.
Welcome back. 7:49 here in London. So 11 minutes until we get European trading for Wednesday, the 7th of May. And this is the picture, pretty flat, actually, for European equity markets. No expectation we move too far. US futures pointing a little bit higher. Let's talk to our Markets Live executive editor, Mark Cudmore, who joins us now for 3 minutes on the markets. And, Mark, if we look at US futures, they're actually kind of positive, up 0.5% or so. Risk appetite being driven by talk of a trade conversation between China and the US, by China stimulus perhaps as well, putting aside geopolitical tensions in other parts of Asia, and maybe even not too moved by what we expect from the Fed. What do you think is driving sentiment right now?
I think that probably the most important thing is the fact that US and China are going to meet for trade talks this weekend. That's impaired by the fact that expectations for China tariffs to be paused or halved or something to change is absolutely expected in the markets. People kind of ignoring the 145% as an impossible nightmare that can't sustain. But it's how much relief do we need to actually get a sustainable bounce? What's really interesting at the moment is that we have a bifurcation in kind of views depending on where you're based. Americans generally tend to be much more positive on overall the situation and what's going to happen here through two different narratives. One is that Trump's plan is a good plan. He'll get loads of great deals and loads of investments and loads of great trade deals. The other is that he'll have to backtrack so aggressively that that'll provide such a relief, and he'll instead focus on fiscal and abandon tariffs entirely. Even though they're contradictory, Americans tend to be more positive on what's happening and that there'll ultimately be a relief rally. The rest of the world is more concerned. It is that marginal flow from the rest of the world wanting to decrease their US exposure over the coming years that will be the bigger background dynamic. So that's a very long-winded answer saying there's a lot going on. There's India story, Germany story, Fed story, dollar story, but I think it is the trade one that is most dominant in the short term.
OK. Paul Tudor-Jones was talking about this yesterday, and he was talking about the kind of, even if you halve tariffs, you're still going to have a major impact. Stocks are probably going to go lower. But he also said that he thinks the Fed is going to sit this one out, at least for a while. Is that the message you think we're going to get from Powell a little bit later on today? We're going to sit this one out. We need more information. We still don't see anything in the hard data, but we think it's coming.
Absolutely, in terms of that, he will not validate the idea that cuts are coming soon. What I think he'll try to do is kind of go, look, the hard data is not showing that the labour market weakness yet, but he'll want to kind of let people know that he's ready to swivel when that hard data cracks. And that's why I think today's Fed will really matter for short-term price action. Because I think short-term, it might sound quite hawkish if he kind of pushes back in the idea of a June cut and says, look, we're more worried about price pressures at the moment. There's no sign of job market weakness. But I don't think it'll be a sustainable hawkish message, because he'll also make very clear, look, if the jobs market suddenly crumbles, we will act, and we will kind of act quickly. But he's not going to preempt that. And given that we've got claims data tomorrow, continuing claims jump last week, I think that if we kind of continue to see some cracks in the jobs market, some worrying signs from the trucking sector, then I think that the Fed might still be cutting aggressively this summer. I can see a world where the Fed pushes back on a June cut, doesn't cut in June, and then does an emergency cut a month or two later.
The flexibility that the Fed is so well known for. We'll see if that comes to fruition. Bloomberg Markets Live executive editor Mark Cudmore joining the program this morning. MLIV Go for more analysis from him and the team. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So Novo Nordisk shares declining on the Tradegate exchange ahead of the open in Copenhagen today. The company actually missing on its sales guidance. A lot of this does seem to be due to weakness in Wegovy, in particular in the US, which is facing competition from GLP-1 compounders. The actual results in terms of the last quarter look pretty strong, but it is the guidance, particularly Wegovy, pointed to as the weakness. We can see that stock has given up most of its massive rally that we've seen over the past few years. It traded at close to 1,000 krona, has actually weakened significantly. We'll see that stock potentially going to fall even more. The other thing to note is the news out of the US in terms of a new appointment in the Biologics and Research Department of the FDA, taken negatively last night. We saw vaccine makers hit in the US. Potentially we're going to see those stocks declining, the broader pharma declining today alongside Novo. There's the GSK ADR as a note as well. Then in terms of shipping, the other sector in focus for me, as Trump says the US will stop bombing the Houthi rebels that have been attacking ships in the Red Sea. That was after a deal was brokered by Oman, according to posts on social media from Trump last night. Keep an eye on AP Moller Maersk, also Hapag-Lloyd, some declines in those stocks this year already. Potentially we're going to see an impact today. Then finally, BMW looking weak on the sales. In terms of that one, sales dropping more than 20% in the last quarter, but margins stronger. So some of the traders actually calling that stock a little bit higher, given we've seen the stock sliding recently. Keep an eye on BMW in Germany this morning.
Thank you very much. Joe Easton, our equities reporter, there with the latest. Yeah, really interesting that BMW excludes a lot of the tariff conversation impact from its numbers. The Open is next. This is Bloomberg.
Wednesday session almost upon us. A couple of minutes to go until the opening trade here in Europe. Little bit of a fade yesterday. Back end of the US session probably means actually there's a little bit of a tailwind from a mechanical point of view. But what you've also got to factor in is that we've got the Bessent talks taking place in Switzerland with China this weekend, and that seems to have lifted US futures. So in terms of the kind of the weighing story, I think there's a lot to think about here in terms of how the markets are going to deal with all of this. Plus, you've got a whole load of earnings you need to be folding in this morning. Plus, you've obviously got the geopolitics to fold in. There is an awful lot going on out there, Kriti, for Europe to think about this morning.
Well, sometimes when I see a lot of news and I get overwhelmed, I just don't do anything. And I think that's the entire vibe of the European market this morning. Because take a look at what futures are doing. They are virtually unchanged, not just on Eurostoxx 50 futures, but on the FTSE 100 as well. Even marginal outperformance on the DAX here, higher by 0.2%. So, Anna, I think the spotlight goes to you. It's not a macro day, it's a micro day.
Well, let's see what we have for you in terms of the individual stock names then. And they come from a host of sectors, and there are some sectors very much in focus. Novo Nordisk certainly in focus. They've said GLP-1 compounders have got a third of the market over in the US. So this is a copy of their GLP-1 drugs, such as Wegovy, for example. And they are trying to take action on that front and expand elsewhere. Shipping stocks, could they move? There is this news around the Houthis. How extensive or limited are the commitments on the ground there, though? So we'll continue to watch that. Maybe that's a longer story, a longer-term story, watching for those shipping routes to be eventually, perhaps, reopened. And BMW certainly very much in focus. They have put out numbers to the markets. The auto margin coming in above estimates. But there are these lines about how they're excluding a lot of the tariff impact. So we'll keep an eye on what exactly is and is not included within these numbers then, Guy.
Yeah, and what do you make of that? What do you do with the stock? Do you just, as Kriti says, maybe sit on your hands on that one? Keep an eye on BAE Systems this morning. There's lots of other names do you want to be focusing on. Orsted's another one. So single stocks are definitely going to be in focus. Let's see how it all factors into the opening trade this morning. London coming through a little bit light. We're down by around 0.2%. As I say, you've got BAE Systems to fold into the narrative this morning. You've got the whole wind story in the UK. You've got trade deals to think about as well when it comes to the UK. But we're down by 0.2%. The 600's down by 0.2% as well. Trying to figure out and fold in all of the news this morning. The market's a weighing mechanism. How is it weighing up all these different factors and putting importance to them? The IBEX is down by only 0.1%, which is a surprise given what happened with Barcelona last night, but we'll come back to that story a little bit later. The CAC 40 is down by 0.4%. How will PSG do against Arsenal. We're down this morning. I joke because actually, to be honest, there's so much going on, and trying to get an understanding of how it all relates this morning I think is quite hard. Taking a step back, trying to figure out what the bigger picture is, the theme that still throws through the earnings is what is happening with the tariff story. Some companies are compensating for it. Other companies are basically saying we're going to stick to our guidance because we simply don't know. And this feels this morning maybe like a don't-know market. Kriti, what does that mean for the sectors?
Well, I think when looking at healthcare, they very much do know, in that you are seeing quite a bit of pressure in terms of the weights this morning. Read across the screen fairly broadly, but I think the healthcare space is really taking a beating. As a sector, down about 1.5%. From an individual mover perspective, you're looking at the likes of AstraZeneca, Novartis, Roche, Sanofi, GSK, all your five biggest weights on the stock 600 this morning. Novo Nordisk, though, having a good day. So perhaps that is the trade there, that if Novo has a good day, the rest don't.
Yeah, I mean, this takes us back perhaps to what we were hearing from Joe Easton just ahead of the open. He was talking about some negativity surrounding some vaccine makers out of the US, and that was reflected in some of the European stocks ADRs overnight, and now that coming through into European session. GSK was one he flagged, and that is indeed down by 3.5%. So perhaps it is that rather than the news around Novo, which seems to have been kind of brushed off. So that the thing that is affecting European drug makers, they followed their US peers lower due to somebody who was appointed to a key role and the background he has. So we'll certainly dig into that one.
Does that mean the Novo move even better? So you could argue that Novo is only up by... it looks like it's not up by much. It's obviously a huge weight to the upside in terms of the index, but the rest of the sector's down. So you could argue in some ways, actually, that outperformance looks even more maybe dramatic on the upside, that it's able to achieve that. I'm taking the positive spin on this. This is a stock that's obviously been hit hard of late. I think we came into the beginning of the year as its most expensive, Europe's most expensive company. I think if it had dropped this morning, it may have dropped below Merz. It's already dropped below a whole load of other stocks as well. In the luxury space.
And what they said didn't sound all that positive this morning, talking about GLP-1 compounders and how much of the market they've taken.
I mean, the generic story in the States has been a long-going one. There's a couple of other ones to keep an eye out here for. Merz, for example, is down about 5.5%. You're seeing BMW actually higher this morning by about 2.3%. Some comments from the CFO hitting the wire just earlier, where he's talking about the fact that the tariff impact on the first quarter is minimal, going as far as to say they're expecting tariff reductions as soon as July. I think this is the most optimistic mood music we've heard from an automaker.
Why is Maersk down by... I just want to check that it's not gone ex-dividend.
We're doing the math live on the air, folks.
Just want to check that it doesn't look like it's gone ex-dividend to me. So I would have thought the shippers would be up to date on the Red Sea stuff.
But if it's something that pulls down shipping rates, that's
true. No. That's how you want to be thinking about this. No, you're absolutely right.
The weird way that shipping companies respond.
This is bad news is good news.
Yeah,
good
absolutely.
news is bad news.
But you flagged that it might be a mover, and I wasn't sure it would be, but it certainly is, down by 6%, more than 6% this morning. Let's bring in Monica Defend, head of Amundi Investment Institute. Monica, help us cut through some of the short-term noise in these markets. There seems a lot of it this morning. The big picture, I suppose, positive, and this is reflected in US futures, even not so much in European stocks, is that we are finally going to see the US and China talk about trade. We have a confirmation that conversation will take place in Switzerland over the weekend. But what kind of expectation should we have around that? How much of the damage is already done, I suppose?
Well, the damage that has been done, I think we are going to see it in the coming data, and probably we will see the hard and soft data gap closing over time. Then it is a good news, and it's a first step towards something that the current situation, I mean, it's unsustainable. This has been said quite vocal and loud at the IMF 2 weeks ago. Having said that, my expectation is that this is just a first step. And again, I tend to rely to what Bessent said 2 weeks ago and repeated yesterday at the Milken conference. This is a 2 to 3 years deal in order to get all the issues solved between US and China. So, nice direction, but the final destination is far away.
Right. So, I mean, 2 to 3 years, that's quite a long time for talks to take place. Do you invest in that theme? Do you invest in a different, evolving relationship between China and the US? Or do you just park that and say, look, I'm investing in Europe right now?
We're trying really on one side to get the big picture on the trade fragmentation and these new geoeconomics shapes that is taken, where definitely we will see some winners and losers, and probably it won't really be about, the regional top-down asset allocation with big directional bets, but more at sectors. Okay. And the reason being that tariffs are going to focus on sectors.
What is the secret sauce to outperforming right now, to just gaining a little bit of alpha when everyone else is, to quote Guy, sitting on their hands?
Well, we've seen these big outflows that started back in December from the U.S. into Europe. Definitely Europe is a region that might be a winner, given what is happening in Europe per se, how the plans in Germany will deploy with infrastructure and defense, and really the ability to recover on productivity. I think is positive. It is positive that the euro is gaining traction versus the US dollar, because this is leaving the ECB the space not to be that under pressure on inflation. Okay. So there are some stars aligning in Europe.
How much of that kind of move or sustained move into the European picture, though, is going to be dealing with ultimately headwinds from a stronger euro?
It depends on how strong the euro will be, because we need to keep in mind that we are an export-driven region. So far, so good. We have as a target 124 as a target versus the US dollar. So as long as we stay around there, we think things will hold.
Year to date, if you're a US dollar investor, the DAX, and I currency convert on the Bloomberg, is up by 28%. Year to date for a dollar investor. If the euro keeps appreciating, does that story become better and better and better? How much of this is just a simple currency trade that the DAX is up nicely. It's up by 17% nearly in euro terms. It's up by 28% in dollar terms. How should US investors be thinking about the currency in terms of their options elsewhere around the world?
I would distinguish the equity market from the fixed income market when it goes to currency. So the U.S. equity market will stay exceptional just because they have this pretty thing that is called technology. And sure, technology will be the long-term win for the U.S. economy and the stock market. When it goes to fixed income, probably is more clear that the European market is more applicable than the U.S. market. So I would say probably the currency will play out in the fixed income. On the equity side, I would stay cautious.
Okay. Just investigate that a little bit more. So the NASDAQ, for a euro investor, is down by 16% year to date. The US is exceptional. It has all this great technology. How much of that, though, is going to be undermined by a weaker currency? I need to think in absolute terms here. I need to think about what is happening with my overall investment. If I'm gaining on the technology front but losing on the currency front, how should I be thinking about the US exceptionalism story? Because it feels exceptional from a technology point of view, but it doesn't feel exceptional from a currency point of view. Is that... just balance those out.
But it's a matter of time horizon. So sure, the technological composition of the sector is a long-term story. On the currency, for how long this will play out is... So
you don't think the currency is a longer-term story? You don't think that's a structural headwind that's going to be there for a while?
I think that on the currency, it's really a bit too early to say whether the US dollar will step down as a reserve currency. Come on, we're just 100 days in this new administration. So it will require some time to rebalance and to say whether the euro can really replace the US dollar as the reserve currency.
You've been doing a lot of thinking. So maybe the dollar is something we can't necessarily be convinced about the direction, but you've been doing a lot of thinking about the next decade in some of your recent reports, Monica, and talking about AI productivity. AI was something we were talking about a lot at the end of last year, and occasionally it gets back on our agenda, but we're so distracted by trade. What do we need to assume about AI over the next decade, and productivity in particular?
Well, for us, really, AI is going to drift productivity higher, both in the US and in the rest of the world, depending on the plans on infrastructure, because you need really to support the AI development, and definitely the US is ahead. But we are seeing some other competitors stepping in. think about India. So it will be kind of a bell distribution where you see some early joiners and some late comers, but the direction of travel is definitely positive.
In terms of how you think longer term, there's been this kind of big shift globally, and we're trying to still to understand it. You just said a moment ago you think we're in the early stages of this. What's your level of understanding at the moment? What's your level of confidence? What's your level... a lot of thinking is happening right now, but how close do you think we are to kind of an answer as to what happens next?
Well, I would love to give you a very honest answer. I don't know. I mean, there is just so much uncertainty, and policy uncertainty probably is even worse than tariff per se. So when I was in Washington 2 weeks ago, seeing how people were disoriented about what is happening at institutional level was for me even more worrisome than the level of tariff. At the point when you know the tariffs are there, they are targeting this sector, you adjust. But on this policy uncertainty, how much will be in, how much will be out, this is really making impossible to make plausible forecast.
So do I just wait? Do I just wait and see?
So what we do is try to pencil down the assumption and try to see the transmission mechanism from here to there and try to size the level of pain. But for the time being, when it goes to the asset allocation, I would stay cautious.
Nice to see you. Thanks for stopping by to come and see us. Greatly appreciated. Monica Defend, head of the Amundi Investment Institute. Thank you very much indeed. Core 6 looks like this. This is what we have this morning. Novo obviously is a big focus, and it is up. It's up even more than when we last checked. Up over 2% right now. LVMH is doing absolutely nothing. Ferrari's a little stronger. ASML not doing a great deal. Schneider's down by 0.7%. Nestle's up 0.7%. Does that make it a defensive market this morning if Nestle's up? I don't know. Novo is probably one of the standout stories, and I suspect that Joe is getting a bit of a bit of time talking about it. Plus also the shippers this morning, Joe. Quite a big reaction.
Absolutely, guys. So big move in the shipping stocks. AP Moller Merz, actually the worst performer at the open of trading. It is down currently 4.8%. Hapag Lloyd down 4.5% as well, potentially trimming a little bit of the losses. But this is news that the US is going to stop bombing the Houthi rebels. This after a deal was brokered by Oman, according to news last night, and that meaning, as was discussed on the show a moment ago, that potentially shipping rates will come under further pressure as the disruption of the Houthi strikes had caused shipping rates to rise, given ships were having to take a longer route around Africa to get to the US from Asia and to Europe, and therefore this is actually seen as negative for shipping profits. Kind of a little bit of a perverse situation in that sense, in that the rates coming down. Negative for AP Moller Merz and Hapag. Then in terms of pharma, under pressure, Novo of course has the numbers out, but this is after news of a new appointment in the US, the Biologics and Research Centre in the US, getting a new head. Vinay Prasad is named as the top official there, and he has been a vocal critic of vaccines, including the COVID vaccine for children, and also just generally negative on the approval process for drugs in the US, and therefore we're seeing that sector declining today. Glaxo down 4%. Sanofi, Astra, Novartis, all of the stocks with big US exposure coming down on that news today. Then we've got the earnings from BMW, an earnings drop, but as we see there, the stock actually higher, so going the wrong way. That is because the margin outlet looking a bit better for BMW. The margin's actually taking the shine today instead of the sales slump. Sales were down around 20% in the last quarter on competition, but that is not the main driver today. Then, in terms of Pandora, all those shiny charm bracelets, they are facing a risk of tariffs, of course, tariffs on Thailand, where they make all those bracelets. But actually, again, it seems to be a margin story. The margin's actually not looking too bad today. So Pandora coming out, that was up around 5%, coming off a little bit, but still not a bad move. Given the headline there, cutting its profit guidance, but still managing to rise 2%, not too bad. For Pandora, then finally a couple more in grocery. We've got a hold over in the Netherlands. That's a big US exposure and faced a hit from the declining US dollar. But actually, that stock, You may have to take my word for it for a minute. That stock is higher. It was up around 5% in Amsterdam. Well, there it is down the bottom there. So we have got it on the screen, up 5% for a hold. And finally, the other one I was looking at was Hensoldt. That was in the defence space, a big jump in orders. Unsurprising given the geopolitical landscape. We've got that down the bottom of the screen there, up 6.9% for Hensoldt in the defence space in Germany. Another mover in European markets this morning.
Joe, thank you. Joe Easton, with all of those movers. A lot of stocks on the move as a result of their earnings. Other news reports will continue to track the path of all of them. Coming up, Novo Nordisk disappoints as the drug maker's blockbuster weight loss drug faces stiff competition in the United States. That's not necessarily being reflected in the share price, so we'll get the details next. This is Bloomberg. Welcome back. This is the opening trade. It is 8:19 here in London, and the European equity market picture looks a little more negative perhaps than anticipated. US futures still point higher, in fact increasingly so, but European futures weighed down by a host of, well, some earnings reports, but then again some earnings reports have sent us higher. It's a mixed bag, it seems, from the companies that have reported this morning, Guy. And some of the outcomes are a little confusing. I love it when we kind of put a narrative on a story and try and assume that that narrative is the right one. Why is Novo up this morning? 2.86%. Shares a little higher. The Danish drug maker trimming its forecast. The market expected it would trim its forecast. Blockbuster obesity and diabetes drugs struggling with competition in the United States. That doesn't sound particularly positive to me, so why is the stock up by 3%? There is one person to ask in this kind of a scenario. He always has a great narrative. Sam Fazeli, senior pharmaceutical analyst at Bloomberg Intelligence, joining us around the table. Good morning.
Good morning.
Why is the stock up?
Yeah, so I think everyone expected this. One of our clients was
the stock to be up?
No, that there will be a downgrade.
Right.
And that they'll miss. Wegovy missed by 9%. Yeah. And apparently there were like 18 preview notes from sell side, all pointing to a possible downgrade. And you can see it on the Bloomberg terminal. We have data, excuse me, for prescriptions. You can see that Wegovy prescriptions are flat. Yep. Zepbound prescriptions are going in a nice straight line upwards. So that was part of it. And of course they had some inventory issues, etc., in the first quarter. But they need to get the initiative back in terms of getting Wegovy to be more prescribed in the US.
Okay. Yeah, they're talking a lot about, well, they're saying this thing's happening in the US, compounders taking a third of the market. Yeah. And I was reading about this, Sam, and it said that the FDA allows the compounders to copy these drugs in a time of shortage. Yeah. But now they're not in a shortage. So does that mean that things get better from here for this company?
Yes,
yeah.
Yes, Anna, they're supposed to. And I just want to remind everybody that Lilly didn't miss. The reason Lilly's share price was down was because they didn't upgrade. So which is a very funny thing, because today we have a downgrade and the share price is up. Yeah. But the reality is that, what Novo has to watch out is that they can't tell a totally different story to what Lilly says. Compounders have been an issue, but that door has been closed, although there's some of them still going. And interestingly, Novo's just done a deal with one of the ones that was the most vocal, which was Hims. If you remember, they announced that last week. And price pressure is what I'm worried about for both of them. On the other hand, we've always been saying the volume is going to be so high that the lower the price, the more volume. Yeah. Let's see that happen.
Well, speaking of lowering the prices, feels like Novo has a few more hurdles than perhaps Lilly does in the regards that, one, if pharmaceutical tariffs come down the pike, that could affect things. But also, Novo had I think, recently partnered with CVS in terms of accessibility and coverage as well, which was surprising given that there was potentially this cost pressure coming down the pike. Can you just put those into context for us?
Yes, so one of the directions that the price was going is as a result of that deal with CVS. The price that they've given CVS is usually like this, and that wasn't a surprise. Any new drug launch, when there's 2 or 3 competitors, they tend to try and win formularies, so they're the only ones on that pharmacy shelf, and their best move is to do something with pricing, and that's what Novo's done. So this is part of that pricing game that I've just been referring to.
Let's stay in the United States. The next director for the Center for Biologics and Research is going to be Vinay Prasad. Who is this person, and why is he having such a big effect on stock prices of vaccine makers in the United States?
So Vinay is a hematologist, well respected in his field. And we have been following him with regards to all his thoughts on myeloma, particularly, which is an area that I specifically look at. One of the things I think is that he's a very vocal and has been a very vocal opponent of some moves that the FDA has made. For instance, previously they accepted a biomarker for myeloma drugs to be approved, and he was an opponent of that. But also he's been a very vocal opponent of broad vaccinations during the COVID period, specifically children, for example. So I think people are thinking this is yet another layer of pressure on the pharmaceutical industry when it comes to getting drugs approved, getting vaccines used particularly, so that mandate might get narrower and narrower and narrower.
Tell us your early impression then, Sam, of the US administration and where it's going to be, where we're going to see consistency of approach towards the pharma sector and where we're going to see change, because clearly vaccination is one of the areas that gets a lot of news flow, and we're seeing that having an impact today. But there's been talk about improving the nation's diet, for example, and that sort of thing adds a different complexion. So what are your first impressions?
A lot of the things I hear I really like. Removing food additives, trying to manage any extra additives that are going in food, trying to move to natural foods more and more. That's great. How that actually gets implemented, that's a big challenge for the administration and etc. So, whereas for the pharmaceutical industry, I think the biggest question is, aside from vaccines, where there's a general, it's not just in the US, here we have a massive measles outbreak. It's the same reason, vaccine hesitancy amongst people. It's pricing, it's drug pricing, and whether there's going to be a tariff, how is that going to be implemented, who does it hurt?
All right, Sam Fazeli, Senior Pharmaceutical Analyst at Bloomberg Intelligence, walking us through everything in the sector. We thank you so much, Guy.
I want to stay in Denmark, but I want to talk about Maersk. So we're going to move on from Novo. Let's talk about Merz. The stock is down really quite sharply this morning. In fact, shippers are broadly down really quite sharply. The reason for this appears to be that a deal has been done with the Houthis. There is virtually no detail about the deal that has been done with the Houthis and the United States. And if you read Middle Eastern newspapers, they're talking about the fact that this has been done in advance of Trump's visit to the region because you didn't want to have this campaign ongoing while he was there, because that would have caused problems for the Saudis, etc. So I don't know how this lasts. The details are scant. But as you pointed out earlier, and I got the wrong way around, shippers are down because shipping rates are likely to fall. If you can re-access the Red Sea, that's going to mean you don't have to go around the Cape. That means that actually the capacity is going to come back into the market. That means the shipping rates are going to go lower. So in some ways it's a logical response. But there is a lack of detail this morning.
There is, and you just wonder if some of these moves, therefore, Kriti, are premature. BMW, the auto sector, also in focus.
Absolutely. They're actually making comments on this tariff story, which is really interesting. They said a limited impact on their first quarter earnings. When you look at their second quarter earnings, they are having a fairly measured response as well. This is a complete sea change from a global automaker, because they actually said they're expecting a reduction by July. Those shares higher by 3.9%.
Let's talk about the defence sector within Europe, because Hensoldt spoke to our colleagues on Bloomberg TV earlier on this morning. This is the German defence business. They raised their long-term guidance to reflect increased European defence spending. The stock is up by 6.4% right now. It even had a volatility interruption earlier. Such was the enthusiasm. So we continue, of course, to watch developments around the defence sector. Coming up on the programme, the US and China announced trade talks in Switzerland this week, while Canada tries to calm tensions with its southern neighbour. We will discuss all the latest trade headlines with the former Chief of Staff at the US President's Council of Economic Advisers. This is Bloomberg.
This is the opening trade, about 30 minutes into today's session, starting to see the micro seep up to the macro. When we're looking at some of these individual movements, we're looking at Euro Stoxx 50, that's down about 0.1%. A Stock 600, that's down about 0.3%. Underperformance when it comes to the French index there. So that's interesting, given that we are seeing some individual movers in the likes of shipping, in the likes of automaking as well, that haven't really shown up in the broader indexes. So that is going to be something that we keep an eye on.
Let's talk about what is happening in terms of this trade narrative and the picture that we are watching so carefully at the moment, because it does seem as if this is going to be the kind of the story that we build up to throughout the week. I can't believe that I'm talking about this on a day when the Fed is kind of it's Fed day.
I think we've got time in around 20 minutes to talk about that.
We'll talk about the Fed,
yes,
which is in some ways amazing, Kriti, that is kind of where we are right now. But it seems as if the trade story, this weekend's talks, That's now the number one theme.
Absolutely. I think we've got the perfect guest to talk about it there. Let's go to those high-level trade talks happening in Switzerland later this week, led by the U.S. Treasury Secretary and Chinese Vice Premier. Harry Broadman, former chief of staff at the President's Council of Economic Advisors, joined the program. We should mention he was also a former U.S. Assistant Trade Representative who led negotiations to establish both the WTO and NAFTA. Harry, pleasure to have you on the program. It's a fascinating resume to have, of course. Walk us through kind of your initial take on this trade or potential trade talk happening in Switzerland between the United States and China after a little bit of, I want to say, silence from both sides in terms of coming to some sort of agreement.
I think silence is an understatement. And I think the fact that this is happening neither in Beijing or Washington or in somewhere else is sort of interesting. It may indicate that both sides are still posturing before they get into any kind of substantive conversation. That's my take.
When it comes to that substantive conversation, though, where does it even begin? What do you think is the number one issue, given that there's questions around intellectual property, there's questions around tech, there's questions around tariffs, not to mention the political support for, well, now India, Pakistan, the support between Russia, Ukraine, and other kind of hotspots around the world. Where do those conversations in Switzerland begin?
I think you're quite right to put it in that broad context, because the agenda is quite full there. And these other issues that you just mentioned are preoccupying people. So I think it's up to the U.S., frankly, rather than China, to try to dive deep into what can the U.S. do to satisfy Mr. Trump and his friends about reducing, the trade war between China and the U.S. I don't know if you saw the Treasury Secretary yesterday testifying before the Hill on questions like this. It was quite a stunning display of sort of inability to read a room politically, let alone sort of making any substantive context about what's going on. So the Chinese, I know them quite well. I've worked there for years. They're not stupid, and I think they're going to wonder what is going on in this meeting. That's my guess. Of course, we'll see ex post whether or not my hypothesis is correct or not.
Harry, what do you think the Chinese want from the meeting? How are they approaching it? Give us a sense of what you think they're going to be looking at as they approach this process.
Well, as many people know, the Chinese take a very long view of things, and I think that's the view that they're going to take and are taking with respect to Washington. I also think they have a pretty good read on Mr. Trump from his first term, and they know that he can be quite erratic. My guess is they're going to let him talk and let the team, his side, talk most, and then they are going to react. I would be surprised if they begin by putting any proposal on the table. I think they really want to hear once and for all what really is behind Mr. Trump's moves. Because yesterday, in the conversation that Mr. Trump had with Mr. Carney, it was quite interesting that he didn't even mention tariffs or any kind of trade discussions whatsoever. I'm sure the Chinese saw that, the press readout of that, and I'm sure they're sort of scratching their head. What is going to take place in Switzerland?
Yep. So set expectations for me. Financial markets are going to be on tenterhooks. We are going to build up to this process throughout the week. As we were mentioning earlier, it's Fed Day. We're barely talking about it. We have a really interesting development. We don't know quite how to read it. What do you think expectations should be? What is a win here? What should generate a positive market reaction, and what do you think should generate a negative market reaction?
Well, on the win side, and let's go to the tail of the distribution, a real win would be sort of a simmering or a cessation of trade hostilities between the two. That the prospects of that are less than negative, if I can say. I think the real outcome is going to be, let's have further talks. That is likely to be the outcome of these kinds of sessions. It would be striking, given how I know China, that there's going to be a resolution, any kind of meaningful resolution by this first engagement. This is more of a table-setting discussion, is my sense.
Harry, good morning. We heard from President Trump yesterday. He was talking about how he thinks he's going to set the terms. He says he'll set the terms for these trade deals. I wonder whether that will play out okay for certain partners, for certain trade conversations, but I wonder how that goes down with China.
it will not go down well with China. And I think, I mean, it's striking that he's being so assertive on this because, as I say, the most recent meeting with the head of state yesterday with Carney was he did not seem interested at all, Mr. Trump, in trade at all. I mean, he really did not dive deep substantively, and I'm not sure that his deputies in this meeting, have a leash that allows them to dive deep. So I think if there's no resolution, if sort of going on as usual, that's probably the most likely outcome. There may be some kind of titular, fig leaf put on the conversations, but I don't think that there are going to be any substantive outcomes coming from this.
Harry, outside the United States, we've seen the UK and India agree to a trade deal over the past 48 hours, and not to go to all of the detail of that, which might be outside of your area of interest. But I wonder how you react to the idea that we're seeing other parts of the world do trade deals, ones that have been unavailable, it seems, for a very long time. And I wonder if the presence of President Trump and the tension that he is providing to global trade, whether that is driving others to find common ground.
Absolutely, and I think the UK-India deal is an important one. I do think he's going to wonder, well, how come other countries are being able to engage in trade negotiations and I'm not? That's going to be sort of from a personal perspective. He's going to mention this, and then he's probably going to poo-poo whatever deal was put in place by any other country without him at the table. That's my guess. Now, there's very little that's going to motivate him to make a deal, if you will, at this point. He said yesterday when this meeting with Carney, he says, we don't even need any trade. And he wasn't referring just to Canada. He was talking generally. It was a striking conversation. I don't know if your viewers, have seen the readouts or the tapes of these conversations. It was quite striking.
Harry, speaking of these striking conversations, I'm curious, as Guy kind of pointed out, the markets are bracing for any impact that we hear from the Swiss meetings, any kind of repercussions we hear, or any sort of dialogue we hear from the EU, from the UK. What is the pain point? As we sit here in London, you're joining us from D.C., what is the pain point that the rest of the world can hit when it comes to the United States? So far, we're only talking about goods. Should we be talking about services, financial markets, treasuries? What is the number one pain point the rest of the world can touch?
Well, I think the number one pain point is just to reduce the temperature of what's going on in trade policy on the part of the U.S. I think that's really the pain point. They want to look for progress somewhere. I don't think, they're not even going to be pressing for a double click on that. If there was just some kind of, lowering the temperature and Trump or his deputy saying, we had a really good conversation, we're going to meet again, there's momentum here. That's what I would draw as sort of the best outcome of this meeting, which would calm emotions in global markets. I don't know whether it will calm emotions here in Washington, at least in the White House, but that would be really helpful because the atmospherics now are really quite problematic. I've never seen this kinds of emotions, impacting trade conversations at such a high level at the heads of state. It's as I say, it's quite striking. So I think everyone's on tenterhooks just to see some kind of momentum, even if it's marginal.
Harry, yesterday Paul Tudor-Jones described what we are seeing in terms of the tariff story as the biggest tax hike the United States economy has witnessed since the 1960s. Is that the right way of thinking about it?
I think in part, but I think it's really important to sort of, unbundle a domestic tax issue from international relations and the taxes, essentially the analog on trade. Because listen, the world, the U.S. is the number one economy in the world, and the fact that it's floundering from a policy perspective, I think is really quite troubling emotionally for traders, for investors, for workers, for consumers. At least it is here in the United States, and I suspect it is in other economies around the world. So people are just looking for the temperature to drop down, but I think more importantly, to have the President of the United States act rationally about what does he want and what does it take to move from A to B.
Harry, thank you so much. Thanks for your time. Harry Broadman, former Chief of Staff at the President's Council of Economic Advisers. We thank you for joining us on the programme. Coming up here on this programme, we will have the latest developments after India launched military strikes against Pakistan in response to an attack in Kashmir last month. More on that. This is Bloomberg. Welcome back to the opening trade. We're 44 minutes into our European trading session and seeing some weakness across European equity markets. US futures, though, point higher, focused on trade themes. Let us turn to some geopolitical news coming to us from Asia. India says it has struck 9 targets in military strikes against Pakistan. The tit-for-tat blows come after a militant attack that killed 26 people in Kashmir last month. India says it only hit what it called known terror camps.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
Pakistan says the strikes killed 26 civilians, adding that it shot down 5 Indian jets in retaliation. Its defence minister explained his country's actions.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
Bloomberg's Pakistan Bureau Chief Fatih Mungi joins us now. Fatih, take us through the latest developments here. What has been happening in the last few hours?
Yes, thank you for having me. So basically, in the past few hours, what we've seen is that both sides, Pakistan and Indian officials, have given some details on what happened during the middle of the night. And as you saw, as you played the Indian Foreign Secretary clip, he basically says that they've targeted multiple areas in Pakistan. They haven't hit any civilians, but Pakistan says otherwise. They also did not talk about Pakistan claiming that they have shot down 5 Indian planes. So there is no address to that. But the latest what we understand is from both sides is that this is not over yet. I think that is the main thing to get. Pakistan has said that it will strike back. It will strike back at its own choosing of time and day. So the retaliation is there, and the Indian official also mentioned that they have intelligence that there will be some strike at some point in time. So that is what everyone is watching out for now.
Fatih, you mentioned that the conflict is not indeed over. What does a further escalation look like? Is there clarity on that?
Well, I think that is the million-dollar question right now. We have seen in the past that there has been a tit-for-tat. So basically, one side does a strike, and the other side does a similar strike, and it ends over there. If Pakistan strikes and it ends over there, which we have seen historically in a few cases with Pakistan, then we can see that it ends over there. But if it doesn't end over there and India decides to respond again, then we're heading in a tricky situation.
Bloomberg's Pakistan Bureau Chief Fatih Mungi joining the program this morning, giving us the context from Karachi. We thank you so much, guys.
Let's turn our attention to one of the other pieces of political news that we got yesterday, this time centred around what was going on in Berlin. Germany's new Chancellor making his first trip abroad today after surviving what can only be described as an embarrassing stumble in his efforts to take power yesterday. Friedrich Merz initially failed to win enough votes in Parliament, in the Bundestag yesterday, to take office.
Today, I have the honour of assuming the office of Federal Chancellor in this House. First of all, I'm grateful for the support of the voters and also for the trust of the members of the German Bundestag that I have received today. In the second round of voting, I am very aware of the responsibility that this office entails. I accept this responsibility with humility, but also with determination and confidence, ladies and gentlemen.
Und mit Zuversicht an.
Let's talk to Ollie Crook about what has happened, what will happen, and kind of how we should think about this in the context of the wider European story. Ollie, Merz is now Chancellor. It was a messy start. How does that in any way impact what he does from here? Is he weakened from the get-go?
I think he absolutely is, Guy, and I think that it's fair to call it, a fairly inauspicious start. I mean, in the very first few hours of basically what should have been a rubber stamp transition, basically Friedrich Merz failed where no other chancellor had failed in the sort of modern era of German politics by not garnering the support of all of the lawmakers, or even enough of the lawmakers of his coalition. They obviously went back and they managed to vote again. He was sworn in as chancellor, but I think precisely to your point, Guy, it highlights the fragility that still exists under this sort of coalition government, and we should say, Guy, the whole ambition here was to bring out of existence a very unstable three-way coalition government, which fell prematurely because of all the deadlock and disagreements that there were, into an age of political stability in Germany, and that really did not happen in the first few hours. In the sort of, for Friedrich Merz, after he did get sworn in, he did give us a flavor of kind of how he wants to govern, how he wants to run his government. I'll quote from what he said yesterday. He says, "I just want to govern without pomp and without superfluous she. I say to the colleagues who joined this federal government with me today, who were sworn in today, we must deliver now." So you'll be pleased to hear a she-free government there in Berlin. But the really point that he's trying to make here is that they are going to govern with sobriety, with competence and velocity, something that has basically failed to materialize over the last few years with the last government, and something that the AfD has been exploiting to sort of great fanfare, saying that basically mainstream parties with all these coalitions cannot get anything done in Germany.
OK, excellent. Nice use of language. Now, Merz is meeting Macron and he's meeting Tusk today, so hitting the ground running, I'm sure, will be the narrative. What's going to be on their agenda?
Yeah, so listen, for all the domestic issues that exist within Germany, we won't have to enumerate all of them. We've been talking about them for several years now on Bloomberg Television, on this program and others. The other issue that there has been for Germany is it has not really had a global presence. It did not really have as global a presence under Olaf Scholz. He was not somebody who really liked the limelight, didn't really want to assert Germany sort of on the global stage. There is an opportunity here for Friedrich Merz to change that in a world in which Europe will have to assert itself more. So we sort of look at where he's decided to go in his first few days. It tells you something about the messages he wants to send. He goes to Paris today to meet with Emmanuel Macron. A reset in that relationship is certainly necessary. There was a sort of tension between Macron and Olaf Scholz for the years that they were governing together. He then goes to Warsaw to meet Donald Tusk, an absolutely key ally on a number of issues, but specifically defense. And then he goes directly to Brussels on Friday, where he'll meet Ursula von der Leyen. He'll meet Mark Rutte, the Secretary General of NATO, to discuss defense. And then next week, and this is sort of a key meeting, the EPC meeting, you'll remember that Keir Starmer hosted one of these right after he was elected in the United Kingdom, and it gave him the opportunity. This is the largest sort of European level, leader level format that exists across Europe. So it really gives Friedrich Merz an opportunity to meet with all of these leaders in person and begin to establish these relationships in a world where basically the multilateral order is no longer governed by the United States. Who is going to step up? It's going to be countries like Germany and like France, if they can do so. And we should say, just as a final point, this is a different CDU than Angela Merkel. This is a more right-wing CDU. But Friedrich Merz is somebody who is deeply committed to the European project and knows the importance of a united Europe dealing with the problems that they're facing, from China industrial policy to U.S. foreign policy.
Oliver, thank you very much. Bloomberg's Oliver Crook there. And Kriti, I know we were both thinking about this yesterday. It seems that Macron and Merz both agree on the need for a European media platform in the face of U.S. tariffs on that particular industry. So there we go, something that they might find it easy to agree on.
I loved Lionel Laurent's kind of piece on this in opinion. He said that Macron wants a Netflix in Paris, not just Emily.
Not just Emily.
And as a key follower of that program, I should say.
Now he's got Merz in Paris.
Well, he also has to deal with Emily in Rome, which is happening. It's a whole other conversation. Let's talk about the other things we're keeping an eye on, of course. The Papal Conclave begins. If you haven't watched the movie, by the way, highly recommend it. It was fabulous. And speaking of the film industry as well, remember those Hollywood tariffs, or at least the conversations with Trump, very much something that might show up in Disney's earnings, at least commentary around that. We're expecting that after the bell today as well, alongside Uber. But then plenty of data in the U.S. from MBA mortgage applications. But ultimately, the Fed rate decision and comments from Bessent in Congress. Plenty to digest. Let's see what's on the top of Val's mind. Val.
Hey, we got the Fed decision later. It might be maybe the most boring Fed decision this year.
Don't say that. No, Val, this whole show has been building towards you telling us about the Fed.
You're jinxing it.
But there is no forecast or dot plot at this meeting. The nuance is going to be in the press conference. How does Powell talk about the threshold for the next rate cut from the Federal Reserve? What does he need to see in order to telegraph that the next rate cut might be coming? I think that the current market conclusion is that we need to see weakness in the labor market. We need to see the unemployment rate ticking up before Powell starts talking adamantly about the next rate cut. Because frankly, of recently, he's just been focused on the rise in inflation expectations, the worry that there will be some tariff-induced inflation that will prevent the Fed from cutting immediately, maybe as quickly as the market would want them to.
The thing about it sounds really simple. The Fed's going to cut 3 times this year. Kind of, that's the market. Kind of, we're going to cut 3 times this year.
Well, the dot plot says 2. So.
Okay, it's okay. The dot plot says 2. The problem is that at the moment, the kind of the left and the right tails are really big. They're either going to cut hardly at all, or they're going to cut loads. We just got the kind of we're kind of in the middle, which is a kind of weighted average of both of those two things. How real? Is 2 real? Or is none real, or is 5 real? That's the kind of that's the bit that I can't get my head around at the moment, and it feels more extreme than it normally does by quite some considerable margin.
I mean, central bank speak would answer that question by saying uncertainty is high and we don't know and we're on pause until we see further clarity. So I think we're kind of at risk of having a copy-paste kind of answer, from Powell's previous press conferences to questions asked like that. You know, he will talk about the risk on the horizon. I think one thing that could be interesting is the way that he talks about the first quarter GDP print, which did come in negative. On the hawkish side, he could totally brush it off by saying economic fundamentals are still strong. That was totally distorted by trade data. But on the dovish side, he could maybe paint a more negative picture by saying something like the front running of economic activity in the first quarter could lead to weaker economic activity in later quarters. We kind of seen that said by companies in earnings reports. They did see front running of tariffs, but they expect that to drop off steeply in the quarters to come.
It will be about the narrative he chooses to spin then. Valerie, thank you very much. Valerie Teitel with us to preview, of course, the Fed decision. We'll have more earnings interviews coming up in the Pulse. We'll be speaking with the CFO of Novo Nordisk and the CEO of the French utilities company Veolia. Both of those businesses out with statements this morning. That is it for the opening trade. The Pulse is up next. This is Bloomberg.